Welcome to another edition of the Business Personal Podcast, where we bring you closer to the people you do business with. And today we have Tom Lauer on with us. He's the owner of REALTEAM Real Estate based out of Southeast Michigan, doing some great things there and challenging market for sure. And I know there's a lot of questions. There's always a lot of interest in real estate world and mortgages now with rates being all over the place. So thought it'd be a good time to bring Tom on because he has expertise in both areas. So first of all, Tom, thanks for joining us here at a busy time for you.
Of course. Thanks for having me. Just up front, I am an owner of REALTEAM Real Estate, but I also have several great partners that I work with.
Absolutely. Absolutely. Yeah, you've got a great team there that's still doing well, like I said, in a challenging market, which we'll get to. Yeah. So on that note, tight market, we got limited inventory. Everybody's hearing all about that right now. What are some keys to get, I guess, first of all, talking from a buyer standpoint, to make your offer look good? Because it's probably going to be next to a stack of a lot of other offers on these homes.
Yeah, so that's a great question. There are quite a few different things that we're seeing right now. Obviously, in a seller's market where there's not a lot of inventory and there's still a lot of buyers, you have to basically just be very aggressive. And what that means is you're probably, if the days on market of that specific property you're offering on are under 5 or 6, you're probably going to have to make an offer over asking. You might want to let them know, the sellers know, that you want to do an information only inspection, meaning that, hey, I'm going to do an inspection, but nothing in the inspection I'm going to ask for a reduction in price or a concession on. Sometimes, I never recommend this to anybody, but a lot of the offers that do win are offers where they completely waive the inspection. So again, I don't encourage that, but it is a strategy. Another thing that we see quite often is free occupancy. So, basically when the seller lives in the house, and upon sale, upon closing, as the buyer, you give that seller anywhere from 30 to 60 days to live in the house for free so they can kind of move out slowly. That's obviously a huge benefit to the seller in some situations. So occupancy. When it comes to financing, cash is still king. A cash offer at the same price will 99.9% of the time beat an offer with financing. Obviously, the sooner you can close, the quicker close would be better. And there is a thing called an escalation clause that is used quite often by our agents, whereby you make an offer, and in that offer you say, we'll pay you $1,000 above and beyond any highest offer that you have. So, we'll give you $250, but we'll go up to $275. So if you get an offer at $255, we'll go to $256. So escalation clauses are a big deal. And then, if you're gonna use financing, you really want to try as hard as possible to stay conventional versus FHA or VA. Again, as a mortgage guy, I don't understand why it makes a difference, but in the minds of sellers and listing agents, they just, for whatever reason, aren't always pleased with government loans.
Nick Saban used to have that clause in his contract. He's always going to be the highest paid coach in college football. So if someone gets a raise, he's getting a higher number. So the escalation clause, that's definitely an interesting way to go about it.
I did not know that, but it's not surprising at all that Nick Saban invented the escalation clause.
So on that note, okay, so you got this escalation clause, great idea. But then next thing you know, you're paying more for the house than what it was listed for. What should a buyer look at in terms of having to adjust in a situation like that?
Yeah, so the first thing you want to do is when you're formulating this offer and talking with your real estate agent about it, you're going to want to involve your mortgage person right away. So you at least know where you stand. So that even though we're coming in at $250, here's what my cash to closing and my payment's going to be. If we have to stretch to $275. And it only appraises at $250, here's what my cash to closing and my payment is going to be. So, really you just need to know ahead of time before you jump in that pool. And obviously if you're working with a good lender, they're going to break that all down for you.
Yeah. Everything has its cap, right? So you just set your cap on whatever that escalation is, and then you know you're going to be okay from there. So you
Exactly.
just, in that case, you bring the extra money then for down payment to bring that number in at the
Yeah.
appraisal value.
So, you know, the appraisal still matters, right? So let's say asking price is 250, but we're going to go up to 275. Great. We'll go up. We agree to pay 275, and then the appraisal comes in at 250. You know, that extra 25 grand is going to have to go to the bottom line. That's additional cash you're going to have to bring, because, you know, the loan is going to be based on purchase price and appraised value, right? So when the appraisal comes in, that's your value, and the loan to value ratios are going to be based on that appraised value.
Yep. And again, with that, hey, you got your caps. This is the most I can possibly bring for down payment. This is the most I can handle as a monthly payment. So as long as it falls within those parameters, you know, you're prepared to get into a bidding war in a situation like that. So,
and one thing I'll add too, back to the offers getting accepted. One thing that I missed that ties into that is something called an appraisal waiver. And you're seeing that a lot too, because, you know, houses have gone up so much that it's hard to find the ceiling. So some sellers get worried, like, oh my gosh, you know, sure, we can list for 300. I only think it's worth 280, but we'll list at 300. I don't think it's going to appraise at 300. It'll probably appraise at 280. So if you as a buyer come in and say, hey, I believe that it's going to be 300 and I'll pay up to $20,000 above and beyond appraised value up to $300,000. So you put in a waiver for a low appraisal. You know, that wins a lot of offers too, because we are seeing that happen where they really stretch that purchase price, but it doesn't appraise. Well, a good buyer is going to make up that gap to get the house.
So, you know, what I'm hearing is creativity usually wins the battle. And in these cases, the more creative you can get with your offer, the better. Do these sort of sob story letters actually work? You hear stories of potential buyers writing letters of recommendation. Does that work?
Yeah, I mean, it does on some. Right? There's no absolutes in anything. So it doesn't, if you have a compelling story, it doesn't hurt. But, you know, some listing agents, honestly, they're just going to trash that because they like to try to take emotion out of it. But, you know, I do see them go through, and I've definitely seen sales that have happened because they liked the feel of these people. You know, we don't encourage it just because you can get into some fair housing issues. You know, when you're writing a letter like that and you kind of describe the demographic makeup of your family, sometimes that can get you in trouble. So we don't really encourage letter writing. However, I know it does happen out there, and sometimes it does work. But I don't, it's minuscule. You know what I mean? I don't think it's a big deal. Most sellers are just looking for their bottom line, to be honest.
Right. Money talks at the end of the day.
Yep.
So, the good side of a tight market, limited inventory, high interest rates is things can happen a lot faster now. So from the seller side of things, realistically, as long as they have their house priced reasonably, how long can they expect from the time it's listed till the time they can close?
So if we kind of break down the steps, you know, the day it goes live, which means pictures are done, we've signed the listing agreement, the sign is in the yard, and we pick today as go live date. If it's priced at, or my suggestion always is to price slightly below market to drive demand. If you price it the right way, you should be looking at an offer in less than 5 days, sometimes even less. You know, if you overprice the house, that could easily go to 30 or 40. I mean, depending on price is always going to dictate how quickly you get an offer in any market. And once you're under contract, if you're doing mortgage financing, if the buyer has to get a mortgage, typically it's going to be 30 to 45 days before you close, just because they got to do the underwriting and the appraisal and all that. If you're looking at a cash sale, really the only thing that has to be done is title work, which sometimes can happen in as soon as, you know, 4 or 5 days. So if you get a cash offer, you could be looking at a closing in less than 10 days from when you consummate the purchase agreement or the contract.
Can sell a home almost faster in the same amount of time as a car now. That's insane.
Yes. Yes, no doubt.
So you had touched on possibly waiving a home inspection. That could give you an edge in the process. In a tight market like this, where there's a bidding war going on, is it harder to get the seller to pay for repairs to the home? You kind of just have to say, I'm buying this as is.
It is. It is, but that's where, and there's been a lot of talk about real estate agents and commissions and all that, but honestly, that's where the value of your real estate agent comes in. Everything is a negotiation, and once you're locked into a purchase agreement, you really, a seller doesn't really ever want to walk away from that agreement, right? So can you still ask if say we got a bad roof, bad air conditioner, and we're looking at $7,500 in repairs? You can probably get a couple thousand out of a seller, because again, think of the seller, they're probably going to get asking or over asking, right? Because of what the house went for, and they went into the transaction with their bottom line number, and at this point, before the inspection, their bottom line number is probably a little bit better than they thought it was going to be. So unless the seller is just very greedy and really focused on that bottom number, I still see people getting some type of concession or some type of price reduction for legitimate issues with the house.
Just in terms of numbers, to keep people kind of an idea of where the market's at, you shared some numbers with me before recording, just kind of how REALTEAM is doing this year. What are you seeing right now out in the market? What's your feeling of things?
So I mean, my feeling is still good because our company is doing very, very well. My feeling for the overall broader market is that things are rough. Mortgage applications are down 50% from pre-pandemic levels. So, we live in Detroit, Michigan, and we're really like the world capital for mortgages with United Wholesale and Quicken Loans. And when you think about the fact that mortgage applications are down 50%, it just makes you wonder about all these loan officers, all these people that are involved with mortgages. So that's a big deal. Our market specifically, as far as closed real estate transactions, we're down about 18% year over year. So we have 18% less closings at this time right now than we did last year. So that's concerning in what has already been a very tight market. There's definitely some headwinds in the real estate market, and for good companies, good brokerages, that's really where you can start to leapfrog and really eat up a lot of market share. So I'm very proud to say that REALTEAM Real Estate is ahead of where we were last year in a market that's down 18%, which just tells me that we're taking market share from other people, which is something me and my partners are very proud of and what we're going to continue to focus on.
Are you seeing that lending is more responsible now than what it's been before? The people that are actually buying these homes can handle the payments they're going to get?
We are. There are some. We're still in a very big affordability crisis, in my opinion. Fortunately, the affordability crisis is stopping people from getting loans. It's not an affordability crisis of people that are already homeowners, right? Because a very high percentage of all the homes out there that have financing have fixed rates now. What happened in 08, 09 really kind of stripped out a lot of those, almost all of the non-traditional products that were either adjustable or negative amortizing. So I don't think we're going to see as big of an issue. However, when you start to look at how much homeowners insurance is going up, how much property taxes are going up, that's still a big driver of monthly payment. And with inflation the way it's been, and wage growth has not been that strong. So when you have your same wages, you're spending a lot more on gas and groceries, and then your insurance and your taxes go up, still you're going to feel it the same, so that is happening. And we are seeing, delinquency rates and mortgages start to very slowly tick up in some areas of the country, but who knows how bad that'll get. I don't think we're going to see a tsunami like we lived through in '08 or '09. That was a crazy time. That was a crazy time.
So are people putting more money down? Are you seeing it going back to where it was years and years and years ago, where 20% down was kind of the norm for a mortgage? Are you seeing more of that?
If you're comparing things to like, pre '08, absolutely. There were products out there where you could borrow 105% or 110%, which is bonkers. But yeah, there are a few programs where you can do 100% financing still. But most of those programs are government programs, so they're going to be backstopped by the federal government should those default. And then your regular conventional programs, you're definitely seeing, the minimum is 3% down for a conventional. So you're seeing a lot of more like 5, 10, 15, or 20%. I think most of the loans that I've written recently have been 20% down, and your rate does get quite a bit better when you put 20% down.
Yeah, and there was a lot of chatter. Well, this is an election year. There could be a big rate drop right before the election, and we still haven't seen that yet. Who knows if we're going to see that? I think anybody that's sitting on the fence waiting for a rate drop, you might be sitting on that fence for a while. So maybe your focus should be more on stashing money away for a down payment, right?
Yeah, the Fed met yesterday and kind of do what they always do, is didn't do anything and said they might do something, right? So who knows what's going to happen? But I will tell you that if you were a buyer and you've been sitting on the sidelines hoping that rates will go down, great. From 6 months ago, you've seen maybe a 0.25% drop in interest rates, but what you haven't thought about is the fact that prices have gone up close to 10%. Right. In the last 6 months, right. So waiting for an interest rate as prices are increasing, it seems just doesn't seem intelligent to me, especially knowing that, look, you can refinance anytime, right? So get the house. I think our country is moving into a place where home ownership is going to become a luxury rather than the standard or the American dream. It's just so expensive now. And God, if you can still get a house, just to own a house, I would do it. I truly would recommend just jumping and doing it, because look, when rates drop, when we get down to 6 or 5.5, no problem, do a refi, right? But I think a lot of people are going to get pushed out of home ownership, and that's sad.
It's a tricky time. It's a challenging time, but I think you laid out some really creative and insightful ways for people to approach this from both sides, the mortgage and the purchase side. So, Tom, do you have any closing thoughts just for any potential sellers, buyers?
Yeah, I mean, I think what's most important when you're thinking about buying or selling real estate or financing real estate is you need to work with someone you're comfortable with. People get so caught up in getting the best deal and shopping for the best deal. At the end of the day, it's like buying gas. It really is. Like, commissions are going to be the same. They might be 10% higher over here versus 2 cents cheaper over here, but at the end of the day, I go to the gas station that is most convenient for me at the time. Right? I do what's right for me at the time. And I think it's the same thing when you think about hiring a loan officer or a real estate agent is, do business with someone you're comfortable with, because the prices are going to be about the same, right? Commissions are going to be the same. Rates are going to be the same. Do business with someone you're comfortable with that you can trust. That's really all I got.
Well, that's perfect advice to leave people with. So, hey, Tom, again, thanks for your time, and maybe we'll have you on again down the road. This market will continue to evolve and just kind of keep people updated.
Awesome, Ryan. Thank you very much.